Hello, I'm Brent Wilsey, and with me is Chase Wilsey. We're from Wilsey Asset Management. And by the way, if you like the post today, make sure you like it on Facebook, or if you think your friends would benefit from it, share it with them. They might enjoy it as well. Well, today, Chase, we had the Dow and the S&P 500 hit positive territory for 2016. What a surprise, right?
Never saw that one coming. Crazy.
What's kind of crazy, in the third week of January, it was down like 2,000 points, the Dow was. The S&P and the Dow were down about 10-11% during that time frame, and people were saying, remember this? Oh, it's over. It's going to be a terrible year. It's going to go down 40%. Remember those sayings?
Oh my gosh, there's going to be a bear market. I've seen people as crazy saying, oh my gosh, we're going to lose 80% of the Dow and the S&P.
And it was crazy.
Are you kidding me?
Yeah. And again, we're looking at the fundamentals saying, no, you're not seeing the strength here. This is why every day in these posts we talk about the economic information for you and the companies. But this has caused a lot of people problems. Actually, back then, oil prices hit, $26 a barrel? Now they're back up to 40. This shows that, no, that was an anomaly, not the norm. Things were not falling apart. So we've had some good things come out since that time frame. What helped build it was a strong economic data coming back.
Yeah, well, I mean, even when things were so bad and the price of the markets were going down, it's like, why are things going down? Strong economic data. And sure enough, that's being reflected now in the prices of the indexes.
Right. And we kept our clients on track. A lot of people got off track. Why? The emotions caused many people to sell. It was a crazy time to sell.
Yeah, it was. And if you're an emotional investor and you panicked and sold out and had no reasoning behind it, you should not be investing on your own. Investing can be a very emotional game, and don't fall victim to the emotions of investing.
Yeah, and people say, oh, I won't be emotional. But when it happens, when it goes down, they do panic. It's hard not to, because they don't understand the fundamentals, and that's what we do here, is look at the fundamentals. Speaking of that, every day we show you a company we look at. Well, it's tax time. People are starting to think like, oh, taxes, maybe I should buy H&R Block. Well, here's H&R Block. Actually, the chart doesn't look too bad. I mean, you're up here right now around $27.33 or so. The 50-week high is $37.53, the low $26.75. So it kind of looks like it might be a great time to buy during tax season.
Yeah, definitely an interesting company that I'm just happy we're taking a look at.
Yeah. So their sales, however, and I was surprised in this, down 9% year over year. Earnings down by 42%. It's a huge decline. Exactly. Kind of like, wait a minute, that's not good. We understand that. April 2017 earnings per share are $2.03. Gives you a 4P of 13.3. But there's some other things that really start falling apart for this company.
Yeah, also important to note here, we always like to buy companies with a forward PE of 10 to 12. So this is still a pretty overpriced company, would not be buying it. And then also, this is very, very scary. Equity for the company right now, negative $537 million. Never like to see a company with negative equity. It means their liabilities exceed their assets. And strange thing here too is, last year they had positive equity of $1.1 billion. Don't like to see that. Huge decline there. And that was probably attributed to their debt, which has been climbing. Last year it was $1.5 billion, and it now stands at $2.6 billion. So they did a lot of borrowing, and it doesn't seem like that borrowing paid off.
Right. And what I tell people too, if you own this company or looking to buy it, don't buy it until you understand this. But if you own this company, understand what's going on, because this could be the start of a major problem, because you got negative equity now, you got rising debt. Not what you want to see in a business at all. Not a good thing there at all. So, but hey, it's a Friday, and that means tomorrow, Smart Investing Radio Show on 760 KFMB, also by podcast as well. We'll be talking about the GDP, which is Gross Domestic Product, coming out tomorrow. We got hopefully some good things coming out there.
Yeah, very excited to take a look there. It comes out next Friday, I believe. So make sure you tune in to the radio show so we can kind of take a deeper look at the numbers for you.
The numbers going forward, and what the estimates are, and so forth. Same thing, existing home sales coming out next week. We'll talk about that tomorrow. And then durable good orders are coming out next week as well. We'll discuss what those numbers are. Why don't you explain durable good orders, what they really are, so people understand why they're so important?
Yeah, durable goods are, those long-lasting goods. It's cars, sofas, those things that are big, refrigerators,
TVs,
planes. Yes. Those are big, long-lasting goods.
Yep. So important numbers. We'll talk about what they're going to be, and then next week we'll perhaps talk about them on our Facebook post here as well. But we always look at these important things we share with you. Make sure you understand those. And as always, very important, we take your phone calls. You want to have a question, investment question, you want to talk about, I want to know about ABC company, whatever it is, give us a call in. We'll run over the fundamentals for you. And you can hear the show on the radio on 760, KFMB AM 760, also by podcast, and your calls are taken live there. So,
Exactly.
all right. So if the investing thing sounds like, oh my gosh, this is so hard. They talk about debt, equity. What is that? I get too emotional. I'm one of those people sold out. Well, of course, because your emotions are control. Don't let that happen to you. Come in for a conversation with us. We'll talk to you about how we do the fundamental analysis and why looking at these numbers and what we do is so important. Give us a call at 858-546-4306 or go to our website, smartinvesting2000.com. And today's a big day because
It's the last day to sign up for the workshop. Tomorrow, Saturday, March 19th, from 10 a.m. to 12 p.m., we will be hosting the Smart Investing Workshop, How You Should Invest in 2016. And there we'll be analyzing a company. That company is Qualcomm. We'll be telling you if it is a buy in our portfolio or is it not. I don't know. You'll have to come to find out. We'll be reviewing stock fundamental analysis and why it's successful, explaining when to buy and sell a stock, and going over the 5 common mistakes the average investor makes.
so important to be there. Again, if you want to be a smart investor, make sure you go there. It's the last one. We probably won't have one for a while, I imagine, but we'll try to do as many as we can, but be there tomorrow. Great talk.